All right, let's dive into Airbnb's latest quarterly results because they're kind of a puzzle. At first glance, you see a mix of good and bad. But if you look just a little bit closer, you start to see the blueprint of a company that's completely reinventing itself for a whole new chapter of growth.
So yeah, the headline numbers, they look great. Growth is picking up speed, which is exactly what you want to see. But the real story here, the one that kind of signals where they're headed, it's not just in the financials. It's all about this new blueprint they've created. And that brings us to the big question. What exactly did they rebuild?
And here's that puzzle I was talking about. On the one hand, their revenue was a huge win. They blew past expectations, pulling in almost $2.8 billion. Fantastic. But then you look at their earnings per share, or EPS, and it actually missed what the analysts predicted. So you might be wondering, how does that even happen? How do you make more money but earn less per share? Well, it's often a classic sign that a company is going through some really big changes. But here's the thing. If you kind of set that EPS miss aside for a second and look at the engine of the business, the momentum is just undeniable. Revenue growth is up almost 13%, and gross booking value, we'll get to what that means in a sec, is up a whopping 16%. I mean, this is their best growth quarter in more than 2 years. The whole ship is turning, and it is definitely picking up speed. So I just mentioned gross booking value, or GBV. What is that exactly? It's actually pretty simple. It's the grand total of all the money that customers spend on bookings on Airbnb before the company takes its slice of the pie. It's a super important number because it gives you a real sense of the health of the entire platform. If GBV is going up, it means more people are booking more stuff. Simple as that. Okay, so how are they pulling off this acceleration? To really get it, you have to look at this metaphor that the CEO, Brian Chesky, keeps coming back to. He talks about rebuilding the Airbnb house, laying a completely new foundation to support much bigger ambitions. And this quote from him just nails it. He basically says, look, we grew so fast, we were like a little 2-story house. And now we want to add 10 more floors on top, expand into all these new services and countries. Well, you can't just slap 10 floors on a house that wasn't built for it. You have to go all the way back down to the studs and build a much, much stronger foundation first. So what is this new foundation? Well, it's built on an innovation model they call Project Y, and this is their internal blueprint, their secret sauce for how a bunch of small, quick changes can add up to huge, explosive growth. You can think of Project Y as them basically going back to their startup days, but now with the power of a global company. It's a really simple 4-step loop. First, you get a small team and give them one clear goal. Step 2, you ship small changes and test them over and over. 3, you learn really, really fast from what the data is telling you. And finally, step 4, when you find something that works, you hit the gas and scale it everywhere, immediately. And listen, this isn't just some corporate slideshow theory. This thing is already getting big results. Project Y is the engine that gave us some of their biggest recent wins. Things like showing the total price up front, finally, to make things more transparent. Simplifying the fee structure for hosts. And maybe the biggest one of all, reserve now, pay later, which lets you book a trip with literally $0 down. That's a huge game changer. So what's the bottom line on all these seemingly small tweaks? It is absolutely staggering. Just in 2025 alone, all the little improvements that came out of this Project Y blueprint added up to hundreds of millions of dollars in extra revenue. It's a perfect example of how a bunch of small, smart innovations can create this massive financial tailwind. All right, so they've got the successful blueprint, and they know it works. Now what? Well, now they're applying that same model to expand way beyond their core business. They're focused on 3 key pillars: growing supply the smart way, expanding internationally, and launching brand new businesses. Let's start with that first pillar, surgical supply growth. This isn't just about adding more listings willy-nilly. For huge events like the Paris Olympics, they strategically added over 40,000 new hosts. And that's a playbook they're already getting ready to run for the 2026 World Cup. At the same time, they're getting ruthless about quality, removing 500,000 low-performing listings. And the result of all that? The best of the best places their guest favorites now make up almost half of all bookings. Okay, so how does this innovation model work when you're trying to expand into a new country? The perfect case study is Brazil. It's a massive travel market, but just a few years ago, it was a pretty small one for Airbnb. They needed a whole new playbook to win there. And they didn't just, translate the app into Portuguese and call it a day. No, they created a whole localized playbook. They introduced features that really matter to Brazilians, like interest-free installment payments. They leaned into massive cultural moments like Carnival with targeted campaigns. It was all about pairing their huge global scale with really sharp local execution. And the results speak for themselves. Brazil rocketed from being a top 10 market for them into their top 5 globally. This proves they have a powerful, repeatable model for unlocking massive growth in other key international markets. Now for that third pillar, expanding into new businesses. And the big one here is hotels. This slide shows the strategy perfectly. They aren't trying to replace their core offering, they're trying to complement it. So unique homes are for family vacations and boutique hotels are for last-minute business trips. It's a unified strategy to capture every single type of travel. Now for the final piece of the puzzle, the technology that's going to accelerate everything else, artificial intelligence. And I want to be clear, Airbnb isn't just bolting on a chatbot, they are fundamentally rebuilding the entire experience to be AI native. This quote from Brian Chesky captures the vision perfectly. The goal isn't just a smarter app, it's an app that feels like it knows you. It won't just be a search tool, it's going to be a true travel partner, helping you plan your whole trip from start to finish. And we're already seeing the real-world impact of this. In North America, a custom-built AI agent is already resolving 1/3 of all customer support issues without ever needing a human specialist. That's a massive leap in efficiency, and it means you get your problems solved way faster. And their commitment to AI is backed by a major hire, Ahmad Al-Dahle, as their new Chief Technology Officer. At Meta, this is the guy who led the team that built the powerful Llama AI models. It's the clearest possible signal that world-class AI talent is now right at the very core of their strategy. So, with this new foundation, this new innovation model, and this new focus on AI, what does the future actually look like? Well, the company's official outlook for the year ahead pretty much tells the story. The guidance really reflects their confidence. They expect revenue growth to accelerate into the low double digits. They plan to keep their profit margins stable, and they expect to continue generating massive amounts of free cash flow, over $4.6 billion in 2025. It's a picture of profitable, re-accelerating growth. So, Airbnb has spent the last few years meticulously rebuilding its foundation to support a much taller structure. They're not ready to start building skyward. But the final question remains. In a world of constant AI disruption and economic uncertainty, will this new, stronger house they've built be able to withstand whatever storms might be coming?